El-Erian is the president of Queen's College at Cambridge University, chief economic advisor at Allianz. Now, we have a really interesting bifurcation, if you will. On the one hand, you've got these worries and Feds and things, rates will continue to go. But until this week, the buoyant market had given the impression that it was all over, nothing to see here, it's all over now. Where do you stand?
So it had given that impression, Richard, because the data was supportive of somewhat of a soft landing. What do I mean by that? Not much sacrifice in growth, no recession in Germany, no recession in the US, and inflation coming down. Today, we got a bit of a shock. We found out that German GDP contracted. It was expected to expand. And we found out that Spanish inflation came a whole percentage point higher than people expected. So what you have now is doubt coming back into the market, and that's the right thing. We are not destined for a soft landing. We may get it, but it's a low probability. We have to be open to the possibility that's going to be very bumpy from here.
OK, except I come back to this point that, you know, when I was presenting this programme last week, we were all about, all over, carry on, markets buoyant and rallying. It's not going to be that bad, soft landing. Even the IMF has recalibrated its growth forecast.
Yes, and if they have, they've done it too fast. Look, we have had lots of head fakes. Remember the notion that inflation could be transitory. Now, simply because we benefited from a warmer winter in Europe, people got carried away. We have growth headwinds, and we have the likelihood of sticky inflation. I think it's going to be a bumpy journey. The big question is, will it be a better destination? It is possible that it'd be a better destination, but policymakers have to get it right.
In your view, at the moment, let's say we get a couple more rate rises, 0.25%, maybe 1, maybe 2, as we head on the Fed towards 5.25. How much more, in your view, should they be doing?
I think they'll need to do another 0.5 to 0.75 of a percentage point. If it were up to me, I would do 0.5% on Wednesday, not the 0.25% that everybody expects, because I think that's what they will do. I would do 0.5%. Why? Because I don't want to tighten policy into a weakening economy. The big action is going to come from Europe and the UK. They're going to do 0.5 percentage point, and they'll probably do another 0.5 percentage points after that.
Are these rate rises? I mean, I'm in the UK at the moment, and I just looked at my mortgage here. I mean, it's doubled. It's in the space of 6 months since they started rate rising, 8 months. It's actually more than doubled. How can ordinary house people with mortgage, how can people afford this?
And that's the tragedy of starting too late. That is a tragedy of mischaracterizing inflation as transitory when it wasn't. Then you have to play catch up. You pointed out the Fed had one of its biggest year of rate increases. It could have spread that out over 2 years. It wouldn't have had to go as far, but they started late. But let me just say one thing, Richard. You and I remember the days of high inflation. Those are not good days. So getting inflation low and stable is very important for long-term economic well-being.
So let's take the market. And I guess what every investor, large or small, big or little, really wants to know is, are we at the bottom or near the bottom? And when is it going to be time to buy?
So people have been buying already. We've had one of the best Januaries for the last 50 years, with gains of 6% for the S&P, 11% for NASDAQ, 8 to 11% for Germany, France, Italy. We've had a great start to the year. I think we'll probably give some of it back. So it's not going to be smooth from here. It's going to be quite bumpy. It wouldn't surprise me if we go down a bit before we start going up again. There's a lot of uncertainty, and the market ignored too much of it in January.
The difficulties that we now face over the next over the rest of the year, I don't doubt, Mohamed, that there's a light at the end of the tunnel. And, I mean, but do you think we're bumping along? I don't just mean the market; I mean economically. Do you think we're bumping along the bottom, or is there much more grimness to come?
So there could be more grimness to come. I mean, there's a cost of living crisis going on. There is the likelihood of higher income insecurity. What we're not seeing enough of is growth-oriented policies. We're seeing talk, we've heard it in the UK, the notion of the 4 E's, why we need economic growth. But how you're going to get economic growth hasn't been detailed yet. And growth is the solution to many of our problems.
Mohamed El-Erian, I'm grateful to talk to you. Thank you, sir.